For the last 2 years, Canadians have been suffering the weights of high interest rates. And so now looking forward, we keep wondering, when is Canada going to have its time to shine with respect to high economic growth?
Did you know Sydney and Toronto are neck and neck for the most expensive cities in the world? But wait, because both Australia and Canada are grappling with the same economic woes. What's the deal? Despite being separated by over 14,000 miles, Australia and Canada shares many similarities. Both countries have constitutional monarchies and federal states as their form of government, and they are both Commonwealth of Nations member with a shared history of British colonization. The particular difficulties faced by both countries is managing relatively tiny populations dispersed over large and hostile regions. Their respective geographical locations are especially noteworthy since whereas over 80% of Australians live within 100 miles of the US border, nearly 80% of Canadians reside along Australia's beaches. Together, Australia and Canada's economies would rank 6th in the world, slightly smaller than Japan's and larger than India's. Given what you can buy with that money, Australia and Canada have comparable GDPs per person. Australia at about $63,000 and Canada at $58,000, respectively. When it comes to their economic structure, the manufacturing, mining, and agricultural sectors of both nations' economy are remarkably similar. But compared to Canada, Australia depends more on mining and less on manufacturing. You may observe that their stock markets have risen in a similar way if you examine how they have developed over the previous 30 years. The Queensland town of Charters Towers became so prosperous during the late 1800s gold rush that it established its own stock exchange. More than a century later, Queensland is currently seeing the winding down of yet another mining boom. Even though the mining business has ups and downs, Australia has managed to weather the storm. At its height, mining investment accounted for 9% of the nation's GDP. This was particularly true when Australia was racing to supply China with coal and iron ore, which resulted in a sharp increase in earnings. However, mining corporations ceased funding large projects when the demand and prices for these commodities fell, which resulted in lower investment and fewer jobs. In Canada, similar surges have happened. Canada saw the first major oil boom in North America during the 1850s. Growing investment in the oil and gas industry has fueled the gains in crude oil production quantities and export values throughout the majority of the last 30 years. Oil sand projects in Canada became the focus of investment in oil and gas projects as technology developed and oil price increased over time. But since 2008, declining oil prices have put a brake on economic growth, causing the central province to see the slower growth in Western Canada and a decrease in the manufacturing and services sectors. Their corporate environments are also very similar. For instance, Canada's Brookfield is closely trailing the world's largest manager of infrastructure investments, Macquarie, an Australian firm. That being said, Fortune's list of the 10 largest corporations in the world by revenue shows that 6 of them are American or Chinese. In contrast, the biggest Australian company, mining giant BHP Group, is ranked only 180th. And the top Canadian corporation, Brookfield Asset Management, is only ranked 117th. This demonstrates that Australian and Canadian businesses have forgotten how to compete. Furthermore, the largest economy in the world appears to be in a prime example of ideal competition: Coles and Woolworths. Australia's 2 biggest supermarket chains hold 59% of the country's grocery market. In Canada, the combined sales of Loblaws and Sobeys account for 34% of all groceries, surpassing the combined sales of the top 4 grocery retailers in the United States. In terms of banking, the 4 largest banks in Canada and Australia retain 3/4 of all customer deposits, while the top banks in the United States only have less than half of that amount. It goes beyond grocery stores and banks too. Domestic aviation is a duopoly in both nations, whereas telecommunications is a triopoly. The list is endless. Australia has given rise to several prestigious surf clothing lines, while Canada has carved itself a market of parkas and other winter apparel. Of course, both are homes to massive producers of commodities. With vast deposits found in Alberta's tar sands, Canada is home to the 4th largest proven oil reserves in the world. Coal, iron ore, and natural gas are among Canada's top commodities exported, in addition to crude oil. Australia is the world's leading producer of lithium, the 3rd largest producer of cobalt, the 4th largest producer of rare earth elements, and the dominant producer of coal and iron ore. It wants to establish itself as a globally significant producer of processed essential minerals by the year 2030. Australia's export revenues in 2023 were largely derived from these items, demonstrating just how dependent Australia is on China's economy. Similarly, Canada's economy is closely linked to that of the United States. It's significant because trade between the 2 countries is essential to Canada's economic growth, and the United States is the country's top trading partner. The US market is a destination for a sizable amount of Canada's exports, which also includes energy, natural resources, and automobiles. This trade relationship highlights how dependent Canada's economy is on US demand, which has an immediate effect on jobs, manufacturing, and GDP growth. Furthermore, the United States is a significant source of direct investment in Canada. supporting a range of industries from manufacturing to technology, strengthening the link between American policies and the country's economy. It is likely that what's occurring is a reflection of the resource curse, a condition that has led to issues like political upheaval and slower growth in South American and African nations with abundantly rich resources. Products classified as high-tech by the World Bank include aerospace, computers, medicines, scientific instruments, and electrical machinery. These products account for over 70% of all OECD member exports, but just 4% and less than 2% of exports from Canada and Australia, respectively. The World Intellectual Property Indicators shows that, in contrast to Americans' 9.9 and South Korea's 28.2, Canada and Australia only grants 5.9 and 6.7 patents per 10,000 people, respectively. The main problem is that their innovation systems aren't receiving enough assistance, compared to the OECD average of 2.7%. Research and development expenditures in both Canada and Australia are relatively modest, at 1.7% and 1.8% of GDP, respectively. Furthermore, the combined amount investment in venture capital in Australia and Canada in 2023 was just $8 billion, which is roughly half of what it was the year before. Venture capital helps finance and startup companies with significant growth potential. Furthermore, these nations are not very welcoming to foreign investment, with stringent regulations, ownership restrictions, and other barriers making it difficult for foreigners to launch firms there. Still, there is a lot of immigration to Canada and Australia. The nation of Canada stands out among others with its high immigration rates. Australia has kept 160,000 yearly immigration as its goal. A key factor in their economy's long-term prosperity is immigration. Additionally, immigrants contribute to the expansion of the labor market and the filling of crucial skills gaps in a variety of industries, including technology, healthcare, and engineering. They also provide diversity, innovation, and a wide range of abilities. Economically speaking, immigrants boost consumer demands for goods and services in addition to augmenting the labor force, hence promoting economic activity. Additionally, immigration has a big impact in the housing markets in Australia and Canada, which raises demand and drives up real estate costs in key cities. Since most immigrants settle in cities like Sydney and Melbourne in Australia, and Toronto and Vancouver in Canada, real estate prices are rising as a result of this demand. Australia, however, faces considerable economic difficulties as a result of its heavy reliance on trade with China. China is the biggest consumer of Australian exports, especially in industries like coal and iron ore. Hence, the country's policy have a direct impact on Australia's economic stability. The dangers present in this dependence have brought to light by the recent geopolitical tensions and China's economic slowdown. Australia runs the possibility of seeing a significant drop in demand for its export as a result of China's economy's uncertainties and possible slowdown. This could result in economic downturn, job losses, and lower national revenue, due in large part of their shared cultural heritage and ties with the United States and the United Kingdom. Canada and Australia have managed to establish strong and enduring partnerships despite their geographical separation and time zone disparities. Furthermore, with a total of estimated value of 85 billion Australian dollars, Australia is a popular destination for investments from Canada. Although Australia and Canada have many similar economic structures and issues, Australia and Canada have adopted different approaches to economic planning. There are advantages and disadvantages to their strong reliance on natural resources, difficulties developing high-tech sectors, and reliance on important trading partners. Both countries must diversify their economies, foster innovation, and adjust to shifts in the global economy in order to maintain sustainable development and competitiveness. That's all, guys. The question remains, will these two economies find a way to weather the storm together? Or will their lucky streak finally run out? Do let us know your thoughts in the comments and subscribe to our channel for more information.